So, if you see, accounting and all, so there is no difference between, even in last session also, I explained that process where there is no difference between normal accounting and fund accounting, right? So now we'll discuss about the basic foundation or basic things of accounting, which will help you to prepare financial statements, even balance sheets, P&L, even fund, NAV calculation as well, and accounting entries. So accounting entries are painful part in this process because 90% people they get tend to get confused between debit and credit, I would say. But today, I'll ensure that, so that whatever doubts that you have with regards to the accounting entries, so that all doubts will resolve. But what I want is note it down each and everything. My every statement would be remarkable, or I would say would be very, very essential for you. All right. So, shall we go ahead then, guys? Yes. How is the juice? I don't see that.
Yes, yes.
Yes, yes, sir.
Is it high, low, or neutral?
Very much high.
It's
Okay.
fine, sir.
So we'll start from the, as I said, scratch. It means we'll start from the scratch. So if you see, now I would like to, discuss about capital. And this same logic you can apply. It means, even in normal business, mutual fund, hedge fund, and even private equity also. So it means there is nothing like separate for private equity and separate for hedge fund. Okay, same logic that you can apply it. So we'll discuss about capital. Capital. Apply the rule where. So now we are discussing about rules. Okay. So note down each and every rule. Same rule that you can apply while working on such a transactions. So when we say capital, it means if you see the capital when capital increase, that you need to record it to the credit side directly. When the capital get increased, then you need to record it to the credit side. When capital get decreased, then you need to record it to the debit side. So in which situation, so that the capital will increase? Note it down. Subscription, capital call, capital call, then subscription, capital call, or any amount if received to the fund as a capital. Any amount received to the fund as a capital. Any means any amount. That information, let's say if that information contains like initial amount, means language that I'm saying in a statement, that you might see language like initial amount, maybe let's say subscription, capital call, additional subscription, maybe wording you would say like commitment, contribution. Anyways, if you see wording like contribution, commitment, initial amount, or investor invested in fund, investor invested in fund. So I would say, if you see, if you take the example of contribution, it means that contribution words contains like the information where the investor, they are contributing to the fund. Contribution means again capital. Commitment means also that you can say it's a capital, right? Initial amount also we treat as a capital. Investor investment, or invested in funds, again that statement also uh, contain like it's again capital, so where investor, they are infusing money or injecting money in business or fund, right? But in a mutual fund you would see wording like, or hedge fund, you would see wording like subscription and capital. Sorry, subscription, a word you would see in mutual fund or hedge fund, and this language that you would see in a private equity, or maybe VC, venture capitals. Note it down, this, it's a rule, right? Even while preparing accounting entries, you will have to check this rule. We'll play KBC, or you can say not kaun banega karodpati, but kaun banega accountant, this type. So I'll ask questions. So then you can apply the same logic, right? So when you say decrease, decrease in capital, when the fund capital will decrease at the time of redemption, distributions, right? Apart from that, you would see wording like return of capital, return of capital, then redemptions, distributions, then apart from that wording, so that you might expect return of capital, then what can be the other name? Distributions, redemptions, distributions, or if you see any statement as such where returning money, returning money to the investors, right? Not fund, investors, return of capital or returning money to the investors, all that you can treat as a, that comes under the redemption, or we are returning that money to the investor, you can say. And if this is the case, so it means that situation would be your decrease in capital, right? And here, when your capital will increase, fund capital will increase. If you see contributions, commitment, initial amount, investors, or subscription, capital call as such, if you have received anything as such, so that case would be your increase in capital, right? So that matter a lot. Lot means a lot. So here, if you see decrease in capital, when we say, it means that you need to record it to the debit side. And apart from that, the redemption wording that you would see where in mutual fund and hedge fund, distribution wording that you would see in private equity or even VC, where they distribute the funds or whatever investment that they have, they distribute it or return it to the investor. All right. Any question, guys? Because this rule, it's a rule, capital rule. While preparing the entries, you need to apply to it. So rule number 1.
Sir, usually in capital, which account we can treat as per the golden rules?
Sorry.
Uh, how to treat the capital for as per the nominal as per the golden rules? It is applicable to which account? Non.
Your voice is echoing. If you can just attach headphone and then speak, if you can. Right. So apply this increase and decrease rule. Now I'll take one example to cover this portion. I'll take one example for redemption. I'll take one example for this decrease or increase or decrease, I would say. Take this example. Let's say GMT fund. Example number. GMT fund received subscription GMT fund received subscription rupees, let's say 50,000 K. Now if I ask you to prepare accounting entry in the books of GMT, how will you prepare it?
Cash account data to capital account.
Cash account data to capital
Capital
account.
account.
So as I said, one logic that you can apply, right? When you see the word like subscription, it means your capital will increase automatically. And if the capital increase, ultimately you need to directly post that, to the capital account credit. Simple. Correct? So capital account debit and cash account credit. Sorry, cash account debit. Cash account debit. Okay, why cash account it will be debited? I'll come to that. We have different heads, as I said. Capital, assets, liabilities, and then expense and income. So now here we are just done with capital. So you can add, capital as debited or credited as and when required. But I'll tell you, when you see, the wording received in your statement, then by default cash should be your debited. Not only capital, but if you see like anything that you have received, if you see anything means anything. If you see, let's say that you have received, so that becomes your cash account debited automatically. If you see that wording, then by default you can record cash as a debited. By default. Are you getting me? And if you see word like paid, let's say redemption paid. Now I'll take the another example with the redemption case where let's say GMT fund confirm redemption and paid it with value of, let's say, 20,000. So when you see the wording like paid or redemption confirm, paid, I would say. So it means by default situation, which is cash will out. And if the cash is out, so that becomes your credit balance. Simple. Why credit balance? Again, so there is a rule, but again, I'll come to that later on. So we'll discuss, just step by step way so that you can understand it. And now, if I ask you to prepare the accounting entry for this, apply the rule. Don't forget this rule. So when we say redemption, so it means your capital, it will reduce, and when the capital will reduce, so that will be debited. All right. Then record the capital account debited. Let's say capital account debit to
Cash.
cash account credit. See this. Any confusion, any question around it? If you forget this rule and if you don't practice, then you won't be able to prepare account.
This is not audible.
My voice is not audible.
Yes, sir.
Still, you're facing any issues?
No, no, no. Your
I
voice
can,
is
yeah,
clear.
we can hear you.
Then, if someone is facing, then means if you can check your internet connectivity also. So these are the rules which you can apply to the your capital. All right. So now I'll decode your liability side. Liabilities. Liabilities, right? So under liabilities, so you would see again same logic. If liabilities, let's say, increases, if liabilities increases, that becomes your, sorry, my bad, credit balance. And if liabilities decreases, that becomes your debit balance. In which case your liability will reduce or increase? Can you guess? Come on. In which case your liabilities will increase?
Paying expenses like rent,
So
salaries.
when you paid, so it means your liabilities that will see there is a difference between expense and liability. Every expense cannot be a liability. So understand that as well. When you paid it, so it means that you have spent it. So when you spend it, so you cannot say, your spends are your liabilities. No. That's
Purchase of securities.
Hmm?
Purchase of securities.
Purchase of securities. One that purchase can be your asset. Then what about liabilities portion?
I am my cash to be paid is on accrual, so it comes under
So it
liability.
means here, note it down. Purchase
Don't read the
securities on
option now.
purchase securities on credit. Purchase shares on credit. Redemption payable. Fees, any fees. Any means any. Any fees payable. Right. purchase shares on credit, redemption payable, fees means any fees payable, that I would say. Then apart from that, so if we see any anything, if you received in advance, anything received in advance, so that all transaction you can treat. If you see, if you received anything in advance, if you, let's say, purchase anything on credit, so that lead to the your total liabilities will increase ultimately. And if your liabilities let's say will increase, so it means automatically you need to record that to the credit side, right? Then what about decrease in liabilities, or when your liabilities will decrease? So it means when you pay,
Sale of asset and profit.
no, not sell. So when you pay your, let's say, this liabilities, right? Let's say your purchase, so it means your purchase on credit, so your liability will increase. When you make the payment of that particular, let's say, credit transaction, so that case your liability will reduce. I'll take that one example. But when you pay, let's say, payable amount, payable expense, or even purchase and redemptions, and even if you reverse, even if you reverse advances, if you reverse advances, so that you can directly record it to the debit side, right? That you can directly record it to the debit side. So here, if you see, in case of, I'll tell you one more technique. When you record this, when your redemption payable, or fees payable, anything received in advance is a payable. So only in this transaction you would see directly involvement of cash to or cash in means advances account, that you can say. But in this case, let's say purchase on credit, or redemption payable on credit, or fees payable on credit, in all three scenarios, there is no cash involved. There is no cash involved. But if you see all three transactions, directly cash is involved. Directly cash is involved. So it means by default, when your liability decreased, and let's say if your cash is involved, cash should be your credited. Here the rule would be cash, credit, and rest items that payable, that would be your debit. Redemption, let's say if you process the redemption, then redemption account debit to cash, in that way you can record it. Correct? Purchase shares on credit. So when you purchase shares on credit, so it means you have created your liabilities, but when you return that out, So when you return the fund to the counterparty, then a accounting entry would be that liability or payable account debit to cash in that way. All right. So have you noted down, guys?
Yes, sir.
What will be the entry for purchase of securities on credit?
Yeah, I'll take that example. So if we see when you purchase anything on credit, what happened? Let's say take the example number 3 I will. GMT fund purchase Wipro stock stocks and let's say 1,000 rupees from JP Morgan. JP Morgan. GMT fund purchase Wipro stock in 20,000 K from JP Morgan on credit. On credit. $10. Right? So how we can record it? This one.
Purchase account debit to JP Morgan account.
Purchase account
JPM account debit.
purchase account debit to payable or JP Morgan. Both are right words. So payable account credit. Right. This is the one entry that you need to prepare. But when you return it out, means return that, let's say whatever capital, sorry, not capital, that purchase value to the counterparty or maybe let's say JP Morgan, then your accounting entry would be payable always, that you can record it to the debit. Why? You can apply this logic. Decrease, apply, don't forget this logic. Then payable account debit, cash and or cash account credit. So in a private equity accounting, you would see, or maybe in some time, no, in an interview, so you would see wording like, this is a non-cash adjustment where cash is not involved, and this is a cash adjustment. Any question? So you may expect the question on this, like, what is the difference between non-cash adjustment and cash adjustment?
Hello, sir.
Yeah.
Sir, sometimes we get ByteDance for the non-cash trades. What does that mean, sir?
Buy, trade.
ByteDance, which are booked under non-cash movement, those broker code.
So it means it is a, see, we have a trade date and settlement date basis accounting, right? So if you
Okay.
follow the trade date basis, so I'll come on that part later on, because we have separate session, dedicated session for trade processing. So I clear that concept, trade date and settlement date accounting. But in short,
Okay.
I'll brief. So if you have a traded basis accounting, it means you will have to follow this one. So on a settlement, your accounting entry would be this. And on trade date, your accounting entry that you need to book like this. So this is comes under your traded basis, and that's what you need to adjust as a non-cash adjustment. So on a trade date, if you are, let's say, adjusting any trades or recording any trades on trade date, so that would be a non-cash adjustment. All right. So rest means you can try the accounting entries, means put a logic. So note it down and try the accounting entries with, fees or redemptions. Try to prepare it. Otherwise, we'll have it. So this is means in this session, we're just going to discuss about the rules. Let me complete at least one, right? Balance it at least, and then your real account. Okay. So we are done with capital. We are done with liabilities. Now we'll take the example of assets. Assets. When your assets increases, that would be your debit balance. When your assets decreases, and that would be your credit balance. So here you can find a relation. When your liability increases, your cash will decreases or your assets will decreases, and when your assets increases, then ultimately your liability will decreases. And if let's say assets and liability both reduce or increase in same direction, it means there is no impact on the per share value or unit. That's how you can relate. So when your assets will increase,
To purchase assets or increases the value.
purchase, right?
But
Prepaid expense, income receivables, here you can categorize due or interest payment. Income receivable, due or interest payment. Purchase, prepaid expenses, income, receivables. Correct. And another one would be your, let's say, your cash also, that will comes under your assets. Apart from that, if you see under purchase, if you see anything as such, uh, let's say equity, bonds, even loans, ABS, MBS, anything as such, if you see, and if the transaction type is, let's say, purchase, so it means by default that transaction you need to record it to the debit side. All right. When your assets will decrease, assets will decrease
Sale
in
of
case of
sale
sale
of
of
assets.
asset. Sale of assets. Then
Uh,
receivable,
dividends payable.
receivable realized, right? Receivable realized, then your assets will ultimately, means there is no impact eventually, but that you will have to reduce it. That receivable will have to reduce it. then assets will increase. If you see any depreciation, so if you see that, even that case also your assets reduce or decrease. So it means in that case how you can record it to the credit. So that's the different story. You cannot record it to the credit, but there is a process. So it means you can say depreciation around it as well. But this I'll mark it so that you can sometime you would see contra entry for this. Then what else? Receivable. When you're see, cash plays crucial role, right? If cash decreases, then you can record it to the credit side. When cash increases, you can record it to the debit side. Simple. Don't forget this rule. Don't forget this rule. And no matter what. If you forget this rule, then you can't post any accounting entries. Always you would see confusion, right? So I'll take one accounting entry for income receivables. So rest we can discuss, means we have ample amount of time to discuss all accounting entries. But I would say I want assurance that you will practice, right? If you don't practice, then nothing will help. Simple.
Sir, could you give an example for the receivable realization?
Yeah, I'm taking it. Dividend receivable. Let's say ABC company, example number 5. ABC company announced dividend. Announce dividend. GMT fund. GMT fund holding investment GMT fund holding investment in ABC company. In ABC company. Right? So let's say dividend X date is today. What is X date recorded? I'll explain that later on. It's a then lengthy discussion. Dividend X date is today. Dividend X date is today. If the dividend X date is today, so it means you will have to record it. So let's say quantity that we are holding 100 and dividend amount is 20. This is the data which you have. So as a fund accountant, so on accounting means, let's say on X date, you will have to prepare accounting entry in the books of fund, right? So if you see such a statement, and let's say if the today is the X date, so on X date, accounting entry would be dividend receivable. Debit to income account. Income account. Credit. On X date, you need to record this accounting entry. Apply the rule. Don't forget this rule. If you see, as I said, receivable, income receivables increases, that you can record it to the debit. Recorded to the debit. So directly I have recorded to the debit. And if you see on a payment date, when payment received, when you received payment, your accounting entry would be
Income account debit to cash account.
now cash account to dividend account credit.
Sir, one small dot. So here we are entering this adjustment entry in JMT fund now, sir.
Yes, GMT.
Uh, if you go with the ABC, then it would be the opposite now for the payment date.
Yeah. Instead receivable, you can create a payables.
Yeah.
Payment also reverse, so that dividend payable to cash in the books of ABC company. So if you see, I have followed the same rule. When cash increases, that will be debited. Go and check it. Dividend receivable, it means will receive cash that I have recorded debited. When you go back and check, when the asset decreases, receivable realized, so it means that will debited, sorry, credited. So if you see, I have recorded it as a credited. So it means you don't need to change your path. Simple. Follow the rules. If you put that rules or practice those rules for next 1 month, trust me, you cannot see any challenges as such in terms of preparing accounting entries in your career. And this is a fact. Now if you see, I'm not a qualified chartered accountant even, but the chartered accountants who approach me, I'm not a unqualified CA or CFA, right? But still, why? Because of practice. And that's what someone rightly quoted, like practice makes a man perfect. Practice every time help you to add some expertise. So add that. Practice it out. Do practice as much as you can. Do it. So now I'll come to the main point. So since we have discussed the aspect, one is capital, then assets, liabilities. Now I will cover the important aspect, which is your real accounting. Now you would surprise. Surprise, it means I'll give a shock. Can you brief about a real accounting rule? What is this? Come on. Debit what comes in?
Debit what comes in, what was total.
Right. Debit what? Comes in. Credit what?
What goes?
So your liabilities, it will goes out, guys. Your capital also goes out. Capital. And what will come in a business? Cash. When you purchase any asset as such, that assets, let's say assets, prepaid expense, receivable, it means if you see this equation, where do you see that equation? liability plus capital. Where do you see this equation? Come on. Where do you see this equation? Capital plus liabilities is equal to assets. Guys, can you hear
Balance
me?
sheet. Balance sheet.
Balance sheets. What is the meaning of the balance sheet, or what do you understand about balance sheet? Balance sheet.
Uh, Here we have all the transactions, like how many capital we have, assets, all those things. No, snapshot of the current position of the company. Normally we can say.
Mirror of the business,
Yes, sir.
right? So mirror of the business, it means to represent the real information, right? Yes, no.
Yes.
Mirror of the business, it means to represent the real information. Am I right?
Yes,
Yes.
sir.
That's what your real account, it means your balance sheet. Your real account, it means your balance sheet.
As per the real account, what comes in, what goes out.
Liabilities goes out.
Yeah,
Whatever
assets
liabilities
come
that
in.
you have, assets, yeah, that's come in, or that you have received, right? Come in or received, same meaning is same. So your all liabilities plus capital will out, your assets will come in business, and that is your real account. I'll give one more shock to you guys. So now you guys are facing lot of issues, let's say preparing, journal entries. You don't need to struggle to prepare journal entries. Let me just, brief about balance sheet. Hence today we'll just cover the balance sheet and your personal account rule. So balance sheet has three segments. One is capital, another one is
Liabilities, assets.
assets. So as I said, capital, again credit balance, liabilities,
Eh,
credit balance, assets,
Assets debit.
debit balance. So it means while preparing accounting entries, why don't you put all assets to the debit side? All assets, it means all assets that you can directly put out to the debit side. While preparing the accounting entries, all liabilities, why don't you put to the credit side? All capital related, transaction, why don't you put it to the credit side? Now, if you ask me, let's say, example, sir, let's say, for example, purchase assets. So, purchase, let's say, stocks, that stocks will be debited. Update that. If you have an investment that would be your debited. Let's say liabilities, management fees payable, management fees payable. So now, if I ask you to prepare, let's say management, sorry, not, we haven't discussed that P&L part, but still. So if I ask you question like, let's say, you have purchase, investment, prepare the accounting entry. It's simple. Investment account debit. Debit to cash account credit. So if you see investment, as I said, if you treat that as assets, so it means ultimately that you're gonna record it to the debit side of a balance sheet. So why don't you, means while preparing the accounting entries, so why don't you update as it is that assets to the debit side of a journal entries? Same for, let's say, capital. Capital you have received. if you see capital, in a balance sheet also we record capital to the credit side. While preparing accounting entries also you need to do the same. Capital account credit side. Done. Right.
Yes, sir.
So this was all about your balance sheet. So in case of any questions, now you go ahead with your questions, but I'm done with your real accounting rule. So your job is just, you need to apply that in the right direction. That's it.
Sir, I have one small doubt. As you said, you need to practice something. You need to practice. So, like, what need of practice, sir? So we can do that.
Refer the 12th standard accounting book and accounting entry. You practice it out.
Sir?
12th standard accounting book, I said you can refer that for a practice if you want.
Okay. Okay, sir.
In an app, if you download my GMT app, refer the free sources where we have attached a couple of books so that you can refer for a practice.
Yeah, sure.
Sir, can you give me the example for the receivable realized?
Hmm? Sorry.
Example for the receivable realized.
Receivable realized, it means dividend. So that was the example for realized. When you received your dividend, when you received cash, so that receivable now realized to you. Right? So
Okay.
cash you have, so that dividend when you received it, so payment date. So it means on payment date dividend received, right?
Okay.
Dividend received. So realized now. Any other question, guys? I'll send you the recorded session link. Give me some time.